Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis and insights. Today is October 23rd, 2025, and we're diving into Dow's third quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to be here to discuss Dow's latest financial performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. Dow reported net sales of $10 billion for the third quarter of 2025, which is an 8% decrease year over year. John, can you elaborate on the factors contributing to this decline?
Absolutely. The decline in net sales is primarily due to lower local prices and reduced volumes, particularly in Europe, the Middle East, Africa, and India. However, there were some gains in the US and Canada, as well as Asia Pacific, which helped offset the decline to some extent. The company's net income was $124 million, and operating EBIT was $180 million, reflecting the challenging market conditions.
EPS forecast and actual results. Analysts had forecasted an EPS of $9.31 for Dow, but the actual GAAP EPS came in at 8th. However, the operating EPS was a loss of 19 cents. John, what can you tell us about these figures?
The GAAP EPS of 0.08 cents was positively impacted by significant items totaling 27 cents per share, primarily from favorable tax adjustments and gains from the sale of Dow's interest in the Dow-AXA joint venture. The operating EPS, which excludes these items, was a loss of 19 cents, indicating the underlying challenges in the business environment.
Operational efficiencies and future outlook. Despite the challenges, Dow reported cash provided by operating activities of $1.1 billion, up significantly from the previous year. What are the key drivers behind this improvement?
Dow has made substantial progress in cost reduction and working capital improvements, which have bolstered their cash flow. The company is on track to deliver over $6.5 billion in near-term cash support, including a $1 billion reduction in CapEx and targeted cost reductions by 2026. CEO Jim Fitterling expressed confidence in Dow's strong position to navigate the current environment.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Dow's key segments fare in this quarter?
The Packaging and Specialty Plastics segment reported net sales of $4.9 billion, down 11% year over year, primarily due to lower polymer prices. The Industrial Intermediates and Infrastructure segment saw a 4% decline in net sales to $2.8 billion, while the Performance Materials and Coatings segment reported a 6% decrease to $2.1 billion. However, Dow's new assets in the U.S. Gulf Coast contributed to sequential volume and earnings growth in key markets.
Key takeaways. In summary, Dow faced a challenging quarter with declines in sales and operating earnings, but the company is making strategic moves to improve its financial position. John, any final thoughts on Dow's investment prospects?
Dow is navigating a tough market environment, but their focus on cost reduction and cash flow improvement is promising. Investors should keep an eye on how these initiatives play out in the coming quarters. The company's strategic positioning and new assets could provide long-term value.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Dow's performance in the comments below.